All right, welcome to another No Bullshit podcast for contractors. In this episode, we are going to rock the house with Leeroy, our contractor accounting expert, and we're going to talk about two major topics that you've got to listen to and get insights on. Number one, how to ensure you're pricing your jobs profitably, the difference between markup and margin. That's one topic. The second topic is near and dear to my heart and definitely your heart is cash flow. How do we define what's known as our cash flow runway? We'll see you guys on the flip side and enjoy the podcast. Later. Until right now, this very moment, contractors have always been on their own, not as tradespeople, but being alone and knowing how to take their business to the next level. They call us working class, they call us blue collar. They say that we don't have the smarts to become the business owner that we're meant to be. That is such bullshit. You have the ability. You're more than any of that. The question really is, where do you get the insights that you need specific to contracting to systemize your business so you can get your profits to pay for your freedom? I'm Andrew Houston. I'm going to show you how to make more profits, how to get more control, how to get more freedom in the simplest, quickest way possible without any of that bullshit. Welcome to the No Bullshit podcast for contractors. Listen up, level up, and if you learn something, like the video, subscribe to the channel, change your business, change your life.
Growing up, my parents started 12 small businesses. My dad, has over 40 years of experience in construction. So a number of those were construction companies. And from a young age, I realized, my parents really struggled with money, didn't have time to figure out the numbers, and were really just putting the numbers, sweeping them under the rug and hoping the accountant will deal with it at year end. And it helped me realize that a lot of small businesses have the same problems. And again, if you're a family, if you're an entrepreneur and you have a family and kids, I can tell you right now, you're not spending as much time as you want with your kids, and you're constantly working 80 to 100 hours a week, right? So this ultimately inspired me to lead a career in business. So I qualified as a chartered accountant out of KPMG, and then did my MBA at the University of Toronto. And we ended up, starting Check the Level, seeing that when it comes to accounting, contractors are very underserved. The reason being that no other industry is like yours. I think the closest industry that I came to that was maybe film, but the reality is when it comes to your type of business, anywhere between 50 to 90% of your costs are variable. So what that means is as you produce more, your costs go up. They're not fixed, which is, as you produce more, your costs stay constant. Something like rent would be a fixed cost, where supplies and materials would be a variable cost. And on top of that, you've got such significant variable costs, but there's no direct relationship between units produced, right? In one year, you could do one job worth $10 million. In the next year, you could do 10 jobs worth $1 million. So you can't say, if I do X number of jobs, it's going to cost me Y in the year. It's very hard to do that. And the problem we found is a lot of accounting firms apply generic industry-wide standard advice to contractors, which actually ends up doing more harm than good, right? You can't go tell a contractor what their markup should be based on what you think a manufacturer is marking up their costs. It just doesn't make sense. That's a little bit of how we started the company. And again, one of the biggest insights I've had is that over 90% of, the one sure way to improve the likelihood of your business succeeding is one, having a pulse on the numbers. Every successful entrepreneur will tell you that what helped them get through their business and ultimately to success is they had a very close, eye on the numbers. And then two is job costing. Job costing is so powerful for a contractor because you can actually see whether you're pricing profitably. And the challenge is you need your bookkeeper's buy-in to actually implement a good job costing system. And again, it's pretty hard to find that. So at Check the Level, we mandate job costing with all our clients. And again, we only work with contractors because that allows us to provide more value to you at the end of the day than what you would otherwise be getting from another accounting firm.
Here's the reality, right? If you're going to reach out for help, I'm just going to tell you right now, if this is your first time listening to this podcast, you're a contractor. Well, I guess, first of all, if you're not a contractor, you probably shouldn't be listening to this podcast. If you are a contractor and you're listening to this podcast, you should stay on if you really want to improve your business. Okay. If you want to take your business to the next level, if you don't, then get off the podcast, go do something else. Okay. But let's say that for those of you that are going to stay, the reality is that the contracting space requires specialized approaches. It requires specialists, and it requires, you to understand that it's a very unique environment. And I'm gonna comment on something you said earlier. You talked about a lot of accounting firms will use like an industry average or things of that nature. I want to just amplify that and just say, guys, being a contractor is just so specialized. I mean, the principles that we teach the contractors are the same principles, but you're unique in your own business in the sense that whatever you're pricing out there, with the numbers that you use, like Leeroy is saying, is going to be different for every even though the principles are saying, it's going to be different for every single fucking contractor out there. Okay. So if you've had a recent breakfast, a lunch, sitting down with the lads, having a pint in the pub, and you're asking them, hey man, what are you charging? Hey, what are you charging? And you're taking that as a gauge. I'm going to tell you right now, stop the presses, red light. You need to listen to this podcast. We're going to talk about, the importance of how, of pricing your jobs properly. And we're also going to talk about cash flow. So those are two topics that, even though the principles are the same, the numerical values that you're going to be using are going to be different no matter what type of contractor you are. And I don't care if it's, there's an insulation company that's sitting down at breakfast with you and you're an insulation company. I don't really give a shit. I don't care if they're doing spray foam, you're doing spray foam. Their numbers are going to be different because they're going to have slightly different overheads. They're going to be slightly different expenses and things of that nature. So don't get stuck in the trap of using other people's data, because other people's data is the wrong data. Would you say that, Leeroy?
Yeah, 100%. Like you're looking for trouble when you're asking your contractor friend like what markup or margin they're applying on their jobs, or two, when you go into that interview with a homeowner to find out the scope of work, and you ask them for like 2 or 3 estimates from competitors just so that you can gauge your price. You're looking for trouble, right? Because the costs associated with your business are different than another's. And
but Leeroy, wait a second. I want to be as competitive as the other guy that's sitting down at the breakfast table with me. So I mean, don't I need to use the same number as he's using? What would you say?
Not at all. Price is like one of the last things homeowners care about, or at least A-class customers care about when it comes to getting a job completed, right? If you are working with a customer that's sensitive with their budget, just imagine what they're going to be like during the job.
Now, let's be reasonable, right? They're going to have a budget. Nobody has endless pockets, and we're not talking, because I know there's going to be somebody listening and going, hey man, that's bullshit. Like, let's not be silly about this. We're not talking about, you're going to go to a client and, your price is going to be 150,000 and everybody else's price is going to be 10 grand. Okay. We're not talking about that. We're talking about within a reasonable scope, a reasonable window, right, of budget and cost, right? But with that being said, so let's get into this topic, right? We've already started the topic. The first topic that we're tabling right now is on the pricing front. So let's just talk about a couple of terms. And actually, before we go any further on this topic, if they want to get a tool from you, Leeroy, where can they get a tool from you?
Yeah, we post a lot of tools on our Instagram page. So Check the Level is our Instagram page. There's a number of really cool tools in there. The first post is probably the most useful tool that I have. I use it all the time. It's just a formula to convert markup into margin and vice versa. You can convert margin into markup. It's really helpful to know that, because I know a lot of people get confused between markup and margin. And unfortunately, the way that the world has worked in terms of accounting software and project management software, I highly recommend that you understand both. For like example,
but you have to.
Yeah, you have to. Yeah. Because like, for example, if you use QuickBooks Online, everything is in terms of margin there. So as a percentage of sales, whatever your profit is as a percentage of sales, that's the definition of
margin. Can I use an example of something? Okay. Yeah. Those of you listening in, all you tradies out there, you get this one. Okay. We're not going to get into mathematical example here, And the reason being, we talked about it, Leroy and I, we decided not to do that because we don't want to, that's why we're referencing these tools, because again, you need to use your numbers in these tools. You need to understand the difference between the two. But let me put it into perspective. Metric, all you tradies know what the next thing I'm going to say. Metric and what? Imperial. Metric and imperial. Okay. You get a machine in from Germany, you get a machine in from Europe, you're using equipment here that's been manufactured in, in North America. And guess what? There's going to be different, one's going to use metric, one's going to use imperial. You know that. I know that. We're not just going to go and say, fuck that. This thing's in metric. I'm going to just use imperial and I'm not even going to know the difference. We wouldn't do that as tradespeople, would we? No, we wouldn't. We wouldn't do that. We'd go, here's the metric. Either I'm going to convert it properly to imperial or I'm going to go the other way, but I need to know what the difference is between the two. Because if I don't, I go and install this machinery, somehow things aren't going to line up. Things are going to break. Things aren't going to function. And guess what? As tradies, we would just go, of course, Andrew, I would know how to deal with that situation. Well, guess what? This is like the same thing when it comes to markup and margin. Okay, you can use either, but you have to understand what the difference is between the two. Would that be a good analogy there?
Yeah,
Leroy?
Yeah.
Okay, cool. All right. It's not like I'm only going to. No, you need to understand the difference between the two, because some softwares, you had said, Leroy, use markup.
Yeah.
And other softwares or other tools like, say, QuickBooks or whatever, use margin or whatever. So just, guys, and if you need to get a tool, you can use Leroy's. You can type in pricing for profits calculator. It's got a simple sheet. So there's no excuses for you not to know how to convert and know what the difference is. And I'll just give one little quick example. And this might make you go, oh shit, Andrew, I need to understand that more. Guys, if let's give the old test to Leroy, because we use especially this number all the time. If I go and mark up something at 100%,
yeah,
is that going to be 100% that I would use for margin?
No, it'd be a 50% margin.
You hear that, everybody? One would be using the number 100. The other one would be using the number 50. Okay. Remember, metric, imperial. Okay. Same thing. So get to know what the difference is. That way you understand how to use it and pick which one works the best for you. Okay. Yeah. All right. So what are some of the things, Leroy? Let's get, you're an expert in this space with dealing with contractors. Yeah. What are some of the things that they have to make sure they include in their pricing?
Yeah. So the most important thing that's most often overlooked is overhead, right? And just to kind of sort of back up behind that, when it comes to your pricing, you have to have a science behind it. It can't be hey, I'm just going to guess, or I'm going to use someone else's markup, because what does that do in a sales call, right? You're just guessing. You're like, I'm just going to throw this in the dark and see if it works. And if the homeowner is happy about it, yes. And you're like ecstatic and emotionally happy about that decision. Whereas if you know what your markup is based on your costs, like your overhead and your target net profit, that conversation with the homeowner in the sales call is a lot less emotional, because you know what the price is in order to make a profit. You don't, if you get a price lower than that, you're going to lose money. Like one of the favorite sayings I've had is, I've heard recently from a contractor was, sometimes you make more money by not doing the job. And what that is like, okay, like I know that job's actually going to cost me more doing it. There's an opportunity cost associated with it that's not going to make my numbers work. So I'm not going to take this job if the homeowner doesn't, meet my pricing threshold.
Absolutely, man. Absolutely. And so tell people I'm going to be straight up, everybody listening in, like a huge percentage, 80-90% of contractors come to Profit for Contractors. And when we ask them, how do you go about pricing a job? And I know when a champion CEO is coming in to Profit for Contractors, we've got you doing a financial audit for them, right? We make sure that you do the financial audit, and that way everybody can get on the same page with a reality check of what's actually going on. But it's interesting how many contractors, when I go, tell me just really quickly, Cole's Notes version, how you go and price a job. Well, come on, Andrew, I take the material, I take my labor, I put this much on it, and I'm waiting, and I'm waiting, And then anything else? No, like I said, I put up my material, my labor, and yeah, I include like if maybe travel time, how long it takes the guys to get there and stuff like that. I'm like, okay, anything else? They're like, no, that's it. And they're missing this thing called overhead. So give everybody, let's just pick a trade. Okay. So let's just use an actual example. Okay. And it doesn't matter. The principles are the same. You got this electrical contractor. Okay. They do, let's just say they do commercial work. All right. They've got, 5 trucks, 6,000 square foot shop. And that's basically, that's the data we have on this. Okay. When you say overhead, what does that actually mean? Because I really struggle sometimes with accountants. Don't take this wrong, because you're a good accountant. There's not many accountants that get along with me, but we do, because we're on the same page. But I'm like, sometimes some of the words that they use, I'm like, fuck, man, you could have came up with a better word than like overhead. What the fuck? What is overhead? What is overhead?
I think one of the easiest ways to define this is, when you talked about estimating a job, you go, hey, okay, cool. This is how much it's going to cost me material. So how many labor hours it's going to cost me. Maybe there's permits or other stuff associated with that specific job. Those are direct costs, right? Costs that can be directly attributed to that job, right? But then you have other costs that you incur in a business that aren't directly attributable to that job, but you still need to incur those expenses in order to run the business, right? So overhead are those other business costs that
examples. So what about the 6,000 square foot building?
Yeah, so the 6,000 square foot building with the workshop, that would be overhead, right?
The 5 trucks,
that would be overhead. So the leases, the repairs, the maintenance. I mean, unless you are including the fuel, is a tricky one.
Let's not deal with the tricky ones. Let's just deal with the ones that, it's like, okay, so I've got to include these overhead. Like, how the hell do I go about doing that, Leeroy?
Yeah. So there's, this topic, there's a lot of ways to do this. But really, there's the 2 easiest ways are, one, you can allocate your overhead based on your available hour, like work billable hours in a year. So if you, for example, let's just keep this simple. I'm a one-man shop. I'm, a small contractor that I'm on the tools. I do all the admin and everything myself, right? There are 2,080 work hours in a year. It's 52 times 40, right? What you've got to do is go, okay, well, there's 2,080 hours in a year, but how many of those hours are actually billable? Like, what can I bill to the client, right? So what you're going to do then is come up with like an efficiency rate, which is like, okay, well, 1 month is gone because of vacation, right? And sick days. You're not going to work that entire bill, that full 2880, because you have to go on vacation and sick and whatever. Then you might say another month is lost because of weather conditions, right? Like sometimes the weather's just not, I can't go out and work on the job site because of weather delays, right? So what you might say then is, okay, well, actually there's only 10 out of 12 months that are billable in a year. Yeah. And then what you do is you take those 10 months times it to get the hours. I think it comes to like 1,500 hours that are actually truly billable in a year.
Yep.
What you do then is you take your overhead. So you calculate what your overhead is for the year, divide it by those 1,500 hours. And what that means is it's like for every hour that you work, you have to charge X amount of dollars just to cover overhead.
That's beautiful. That's beautiful.
Which is the most simple one. One of the most simple ways to do it.
And the nice thing about that way, everybody listening in, say you go and you add, right? You expand, right? So you use the exact same principle, the same process, same steps that Leeroy just talked about, but now you can add that. Hey man, I added another truck. Oh, you know what? Instead, we moved from the 6,000 square foot building to the 9,000 square foot building. Okay, how much does that cost? Well, it cost me this much. How much is the truck per year? This much. Okay, how many months do I got? I still got what? 10 months. The months don't change.
Yeah.
Right? The months don't change.
And you raised a really great point there, is that you have to review this number at least monthly, right? Your overhead's changing. If you're going to go take on another truck, your overhead costs are going to increase. If you hire another employee, your available billable hours changes. Now you've got 2 times the employees versus to spread that overhead across versus 1. Another way that you can allocate overhead is you can spread that overhead over all direct costs. So like materials, like subcontractor costs or whatever. Maybe you're a general contractor and you don't even have field staff. You've only got materials and subcontractor costs and things like that. Now, what you can do is you can also allocate that overhead but across what you expect to spend on those direct costs. So it involves coming up with a formula that says, on average, for every dollar of direct costs that I spend, so for every dollar on supplies and materials or cost of sales that I spend, how much do I spend on overhead on average? So you can actually come up with a formula based on that, and there's a percentage allocation that you would add to the final cost of your estimate. Now, something that's very important here, some of the things that I've seen big mistakes happen, especially among GCs, and you're using the builder trend or something similar, is what you end up doing is you'll estimate the cost of this job, and you might come up, your accountant or someone say, hey, like you need to mark this up by like 100%, right? Or like a 50% margin, either or. What you end up doing is you go, okay, well, I have these general construction costs that I'm okay marking up by 100%, but then I get to the allowances and I can't give I don't feel comfortable charging 100% to the homeowner on this allowance, right? Like it just won't work.
What's an example of an allowance?
So just like, okay, well, like what your cabinetry finishing is, right? Like, what do you want that to look like, right? And if that allowance, you put it in a specific range, and if that homeowner decides to go with it, there's a markup on top of it, and you get obviously some profit associated with that. Now, the problem with this is that what ends up happening is if you're charging 100% on your general construction, and then when it comes to allowances, applying a different markup, you're creating a weighted average markup at the end of the day, which isn't your true markup to cover the cost of an overhead. So what you've got to do is you've got to go, okay, what is the final cost of this project? What is it? It's X dollars, so it's $1 million. I need to have 100% markup to ensure that I hit my profit goals and my and cover the cost of my overhead. So now it's a $2 million job, selling price, right? So the final selling price needs to be 2 million. So you need to back calculate from that so that it becomes, I don't care how you slice and dice that 2 million across allowances and general construction costs, but as long as that final number is 2 million, then you've made enough money to cover your overhead and hit your target net profit, right? You're looking for trouble when you're going through builder trend and changing that markup percentage without ensuring that the selling price results in your target markup for that entire job, right? There's just something to be careful of there.
I love it. Love it. Okay. So, everybody listening in, you can pause these podcasts, go back to it, download the pricing tools, either Leeroy's or mine or both or whatever, and get better control of pricing your jobs. I'm going to leave you off with this, and then we're going to talk about, we've got, maybe 8 or so minutes left in this podcast. We're going to talk about cash flow, but let me just set the rules of the game here. Understand something, all you contractors listening in. When you price that job, okay, I don't give a shit how good your guys are. I don't care how efficient your systems are. I don't care how good your policies are. I don't care if you are the best of the best of the best. If you price the job wrong, you've lost the game. Okay, you've lost the game. You've walked into the field in a game of sports, and no matter how good your guys play, you set them up and set yourself up for failure. Don't do that. Get your pricing. It's the front end of your process of how you're going to make your profits. You fuck that up, you are screwed for the game. And guess what? You do not want to be playing the game back paddling, trying to like, oh my God, now we got to rush this. Now we got to freaking, because that's where mistakes happen. Right. And then you're in a deeper hole. All right. So get your pricing, price your jobs profitably every single time. Okay. And make sure that you understand the difference between markup and margin and including your overhead costs. Don't get sucked into the black hole of using everybody else's number. Use your number because it's you that needs to be profitable. Okay. We're not talking about everybody else's business. We're talking about your business. So on the cash flow front, okay, making sure that we got, I love your analogy, before we got on this podcast, we were shooting the shit and you talked about, we got to make sure we have a cash flow runway. Okay. So let's talk a little bit about cash flow. What do you mean having a cash flow runway? We're talking like a plane lifting off here or what?
Yeah. No, not quite. It's more of like a plane crashing than taking off. Because what Runway effectively does is it says, okay, based on the jobs that I have on the docket, so what I expect in terms of cash coming in and how far that goes out is really up to you, depending on how many jobs you actually have. Based on that level of income and based on what I know it costs to run my business from overhead and any direct costs associated with the job, how many months or days do I have until my bank balance goes nil, right? Like until I actually run out of money. So how that starts is it goes, okay, well, what cash do you have available today? So you take whatever you have in your bank account, you remove customer deposits, you remove your payables from customers, to suppliers, and you remove your tax liabilities, you remove any short-term loans that are becoming due.
Payroll.
So, yeah, well, payroll is going to be coming in later, or the payroll taxes would be one. So you come out with like a net cash balance that says, okay, assuming all my suppliers and everyone came up to me and said, I want my money today, and you've paid it off, what is left over, right? Add your accounts receivables to that. And then what you do is you figure out what it costs to run your business on average every month. And then you deduct your cash, or you deduct or add the cash in or outflow on a month-to-month basis until such a point the balance becomes nil. Then okay, I have 3 months, 2 months, or whatever the case may be to actually, until I have to file Chapter 11. So I have to go get more work. So that is so important right now. Like, I can't explain, like, if there's one thing you take away from this podcast is that this year in 2022, there's massive inflation. There's big scares around that. 2, there are still supply chain delays, which is another concern. And if you don't have an idea of like, okay, if this job actually is delayed and I can't like bill or get money in, and like how much runway I have left until I have to get other jobs to actually support the cash expenses in my job, in my business, you're going to run into like, a cliff, right? Like, understanding your runway in 2022 is going to be, like, to me, is one of the most important things to know today, right? It's February the 2nd. You need to know how much cash you have and like what contingencies you have in place to deal with any delays on the job site, right? The biggest thing about construction companies, when I look at it, it's an insurance problem. It's a risk problem, right? How much risk are you willing to take on in your business, right? And if you've got a family that, you support off your paycheck every month and you're running your business blindly with no sense of what your numbers are going on, like that to me makes me anxious. I'm just anxious talking about that. I think one of the things our clients love about us the most is like, we feel as a part owner in your business. We want to see you succeed. So we hound you on like, hey, like where does this transaction go? What are these expenses? We need to know what your overhead is so we can see like how much runway you have left. Are you bleeding money anywhere? Like we really see ourselves as like, a great partner in your business because we want to see you succeed. I mean, I want to make you money. Like, Check the Levels goal is just to make contractors money, happy at the end of the day. And it's done for contractors only, right? We don't do that for anyone else because we can't guarantee a certain service quality if we're, worried about other industries and their reporting requirements.
Totally, man. Totally. I love it. I just, my 2 cents on this is, I just want to put something into perspective here. You've heard me, maybe you haven't heard me, maybe again, your first time listening on this or what have you, but I'm very consistent about this, which is you need to have a balanced approach when it comes to your cash flow. What do I mean by that? As a contractor and, when I own my contracting business, I'll be honest, I'll be straight up, right? No bullshit. I got my, my adrenaline I got excited when I landed these big jobs, right? And I was really addicted. I'll be straight up. I was addicted to, I need a bigger job and a bigger job and a bigger job and a bigger job. And I ran into major cash flow issues. And the reason when I talk about balance, how's this got anything to do with balance? You have to have a balanced runway. Okay. If you just focus in on big jobs and you don't have service contracts or smaller jobs injecting cash flow, whereby your terms are like, hey man, I'm going to get paid in 15 days or at the end of the week or latest 30 days. And you're constantly bringing on jobs where you've got to be the bank and you're not going to get paid for 90, 120, all these freaking, the big clients are like, yeah, and I got this draw and yeah, okay, you get the draw, you get to pull out some money in 3 months. What's that mean? You're the bank, man, for 3 months. And if you don't in 2022, okay, if you don't look at what Leeroy just described to you as far as this runway, number one, if you don't look at it, your awareness is not going to be at the level to make the right decisions so that you know what to say yes to and say no to. Saying yes to every big job is just to say yes is the wrong fucking approach. You can't just do that. You have to know what your runway of cash flow is to know, hey, what are the right jobs for me so that I have the right runway? Maybe it's a balance of some big ones, balance of some medium ones, balance of some small ones. Hey, guess what? Then I'm going to have a balanced runway. Okay. So make sure that you're balancing your cash flow. Okay. Because the jobs that you accept are the jobs that you have to be the bank for a certain period of time. Right. And guess what? You're not in this freaking business to be the bank. You're not. But the reality is, and this is why we're specialists in this, okay? I mean, seriously, if people don't specialize if they don't truly understand what a contractor's life and world is, they don't understand that you guys got to fork out so much money and you got to fork out so much risk. Now, there are huge rewards. Let's just not talk about all the scary stuff. There's huge rewards. You can become a millionaire. You can live a great lifestyle if you do the stuff that Leeroy teaches and what we teach here at Profit for Contractors, right? You truly can have an amazing world, because this is definitely going to be, if it's not already, the number one place for you to leverage where there's more demand than supply. And guess what? You get to make the rule book, okay? If you use it properly. Know your cash flow, know your runway, know how to balance it, right? But you got to have your awareness first. And then you can make the proper steps so that you can actually say, hey, man, hey, I'm sorry, I can't start that job next month for you. But if it's okay, if you wait 2 months and we can start, and the client goes, yeah, man, I'm okay. And all of a sudden your runway of cash flow is positive, then that's what you want to do. Any last words on the cash flow side, Leeroy?
Yeah, if you find that you're making emotional decisions and you're not confident in your pricing, it just comes down back to, do you know your numbers? And do you have someone that's in your corner to help you support and understand those numbers? That's really what you need. And again, numbers aren't your forte. So you need to find someone to do that. Like some of these clients we speak to, you go from $0 to $1 million in a year, and, you've got to figure out bookkeeping while you're doing that. I think there are way bigger fires to put out than trying to figure out how to use QuickBooks Online in a construction company growing at that rate than what would otherwise be if you had the luxury to do so. So again, don't underestimate the power of numbers. If you're emotional and concerned about your business, you can find solace in understanding your numbers. And if your accountant or bookkeeper is not giving you that support, feel free to reach out to us at checkthelevel.com. Book a call with me and we can see if we can help your business.
I love it, man. And my final wrap up on this No Bullshit podcast is, I use different angles all the time, but here we go. To your point, don't bullshit yourself. Stop bullshitting yourself. Stop saying, yeah, you know what? I don't need this help. I don't need this. I don't need that. Look, I need it. Okay. I need experts behind me. I'm not going to go back to school and become a chartered accountant that specializes in contracting. No, that's not my business. That's not my expertise. Okay. You're great. You have a lot of amazing skill sets. to take your company to the next level, but you need to surround yourself with the right set of experts that are on your, on your team, on your bench, that have got your back, that are able to see things and show you things that you just cannot see by yourself. So stop bullshitting yourself, okay? It took me a long time, I'll be honest with you. And I'm married to a chartered accountant, okay, guys? But guess what? My wife is amazing, amazing person, okay? She was not an expert in construction accounting. She wasn't, okay? And that's not her problem, okay? Well, it became our problem, but use the experts, get the experts, surround yourself with A-player, people, and you're going to have an A-player business. So that's another No Bullshit podcast from Profit Contractors. Thanks, Leeroy. I love having you on these because it's real, it's no bullshit, and you're provided a great amount of information today, guys. Again, use the podcast, abuse the podcast, pause it, rewind it, play it again, take it to your bookkeeper, take it to your account. I don't care what you do with it, but just use it, okay? And we'll see you guys on the flip side. Ciao.